In today's fast-changing business world, money is the lifeblood of every startup, yet not everyone gets a fair chance at traditional bank loans. So what happens when the banks say no? That's where alternative funding steps in a revolutionary way for entrepreneurs and investors to bridge the gap. From crowdfunding and peer-to-peer lending to venture capital and invoice financing, these methods have opened up a world of possibilities. But are they really as easy and accessible as they seem? Let's dive deeper and explore the benefits, challenges, considerations of using alternative funding options and how entrepreneurs like you can navigate this growing landscape wisely. By the end of this session, you will be able to understand the concept and benefits of alternative funding, recognize the challenges and risks involved in using alternative funding methods, familiarize yourself with the various types of alternative funding options available for businesses today. 1. The concept of alternative financing. Alternative financing refers to non-traditional sources of funds that go beyond banks and government loans. These include crowdfunding, peer-to-peer P2P lending, venture capital, invoice financing, merchant cash advances, and many others. These financial solutions are designed for people and businesses who have great ideas, but limited access to traditional capital. They provide flexibility, speed, and inclusivity, allowing entrepreneurs to find creative ways to raise funds. However, these opportunities come with their own set of complexities that must be understood before diving in. 2. The complexity of alternative investments. Unlike traditional bank loans or government grants, alternative investments are not one-size-fits-all. Each funding source has its own terms, risks, and structures. For instance, venture capital deals involve giving away equity part of your company ownership, while crowdfunding campaigns might require you to fulfill promised rewards to backers. The beauty of alternative financing lies in its creativity, but that also means you must do your homework. Understanding how each investment works and what you're agreeing to is key to success. 3. Determining fair value. Another major challenge: valuation. In public markets, stock prices are visible and transparent. But in private or alternative investments, it's not that simple. When you invest or when someone invests in you, you must determine how much your company is truly worth. That's not always easy, because the value often depends on projections, assets, or even investor perception. Tip: before accepting any deal, ensure you understand how the valuation was calculated, because it affects ownership, control, and future profit shares. 4. The challenge of illiquidity. Here's another consideration: illiquidity. In most alternative investments, your money is locked in for a long time. You can't easily pull it out or sell it like a stock on the market. This means you need to be prepared financially and mentally for a long-term commitment. Some investors are now creating secondary markets for private equity to help solve this issue, but overall, liquidity remains a key challenge. 5. Limited reporting and transparency. Because most alternative investments operate under Regulation D offerings, they don't have the same reporting requirements as public companies. That means less information is available about performance, and fewer updates are provided to investors. This limited transparency can make it difficult to assess whether your investment is performing well or whether your business partners are staying accountable. 6. Costs and investor requirements. Let's talk about costs. Alternative funding often comes with higher minimum investments and additional fees for management or transaction services. And in many cases, only accredited investors, those who meet certain income or asset thresholds, are allowed to participate. However, with new innovations like crowdfunding, more ordinary individuals now have access to invest in early-stage companies. Still, it's vital to know the rules, risks, and rights before signing anything. 7. Exploring different alternative funding options. Now, let's look at some common examples of alternative financing that startups use today. Invoice financing factoring. Businesses sell their unpaid invoices to a lender for immediate cash. Crowdfunding. Entrepreneurs raise funds from a large group of people online. each contributing small amounts. Peer-to-peer P2P lending, individuals lend money directly to others without a bank in between. Merchant cash advance, lenders provide cash up front in exchange for a portion of future sales. Revenue-based financing, businesses receive funding in exchange for a fixed percentage of future revenue until repayment is complete. Each option has its strengths, but also unique requirements and risks. Imagine this: Liza, a young entrepreneur, runs a small, eco-friendly clothing business. She applied for a bank loan but was denied due to her limited credit history. Instead of giving up, she launched a crowdfunding campaign. By telling her story online and offering early bird discounts to supporters, she raised Philippine peso 200,000 in just 1 month, enough to expand her production and reach new markets. However, she soon realized the challenge she had to fulfill hundreds of pre-orders while managing her cash flow. This story shows both sides: the opportunity of alternative funding and the responsibility it requires. Ask yourself, what kind of alternative funding option would best suit your business idea and why? Are you ready to handle the risks, requirements, and long-term commitments that come with it? How can you protect yourself from potential fraud, overcommitment, or unfair agreements? In the end, alternative funding is not just about finding money, it's about finding the right kind of money. These options offer freedom, creativity, and opportunity, but they also require wisdom, research, and integrity. Remember, every peso you receive is a responsibility. Whether it's from an investor, a lender, or a crowdfunding supporter, it's a trust you must manage well. So before you leap into the world of alternative funding, pause, plan, and count the cost, because wise decisions today will shape your success tomorrow. Alternative funding can open doors, but only wisdom can keep them open.